Welcome to Cycles TV. This session of the Market Cycles report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. I'm happy to have you here again. We have Monday, 6 o'clock in the evening, Central European Time. I'm happy to have a new episode on Cycles TV here. We will review current global market cycles. If you remember what we did last week, I gave you a longer term picture or based on the inverted yield curve and what this means as a leading indicator for the economic view on the stock market. I promised today to have a look more closely to the related daily or current cycle situation in the main markets. So that's what we're doing today here on the channel. I will share 3 to 4 charts with you, give you some education on cycle analysis, and you should conclude at the end what the message is. I think there's a clear message in today's cycles. I will show you in a second, but I will leave it up to you to draw the conclusion. As always, this is education, so please let's learn something on cycle analysis. Starting with the global stock market cycles, you should be aware where we are coming from the longer term picture in regards to the weekly cycles. So therefore, just a short reminder on the long-term weekly cycle in case you have not seen it or you do not remember it. Let's quickly jump to our dashboard. Let's open the weekly S&P 500 chart. That's the long-term perspective. And from the spectrum, you know that we still are in a very dominant 185 weeks cycle, which turned end of last year. You will remember that we often have referred to this cycle here. So as up to now, it really looks like that the global stock markets are running on rails. Yeah, the cycle is pulling down since end of last year as expected. So the question is, the rally we've seen recently, mid-June to mid-August, how to judge this rally from the last 2 months in regards to this longer term picture. So from this cycle, there's still room to go in the year of 2023. We are at the midpoint of this cycle. This is always an important point in time to keep an eye on. But more important now to get a clue, let's switch to daily cycle analysis, or at least confirming indicators if this looks still like a valid scenario, which will then not give us the information that another bull market is starting. It was just a bear market rally we've seen recently. Therefore, let's try to find confirming data sets. When I'm talking about confirming data sets, in the stock markets, sentiment data sets are very often promising data sets to look at. And the Federal Reserve Bank of St. Louis provides this so-called financial stress index, which is a composite data set on different financial measures. I think it's a mixture of over 10 individual financial instruments they have combined to give a data set on measuring current financial stress in the global markets, or at least the US markets. We can open this data set in our cycle scanner, as this is provided by the FRED, the API, which is provided. I have listed this in my dashboard view here in the sentiment. This is the financial stress index, a weekly data set, which I've pulled up here into our cycle scanner. This is how the financial stress index raw data set looks like. If you just have a look at the absolute values here. So you see we are at very, very low readings currently here. It's more or less the lowest reading you could imagine for a long period in time in this data set. And low readings in financial stress tell us two things, the absolute information, before we switch to the cyclic point of view. Low or turning points in the curve from the low often correspond to market tops. So in that case, to be honest, there's almost no room to go more to the downside. The financial stress index tells us there's a lot of upside potential to see the financial risk now coming into the market. It's anyhow interesting to see no financial stress while we have this economic framework conditions right out here. So this, what you see here from the absolute value right now, this is not the indication of market bottoms. Market bottoms look like peaks in this index here. So these are the point in times when we have really, really important bottoms in the market. This is not how the financial stress looks like at market bottom. This is how financial stress looks like at market tops. Said first. So now we need our cycle analysis to see if there is a turn around the corner in the financial stress, because that's what we're looking for with cycles. Therefore, now applying our cycle analysis, you see the spectrum for this data set here at the bottom. We can clearly identify one important dominant cycle. And this is our very objective method, how we detect the cycle we want to use here, because we want to have a clear separation in the spectrum, a large peak with a green triangle, high strength, which we have here. And the reading is, the length is 198 weeks in that case. And this cycle, I would call it quite similar to the length of the 185 weeks in the raw S&P 500. So close to 200, 190, so a nominal cycle found in both data sets. And if we activate this cycle now, we can see where we are in this cycle here. First and foremost, it's important to review past behavior. And you can easily see how good this long-term cycle was in detecting the overall peaks and bottoms in this data set here. So this cycle, I mean, it's a very long-term cycle here, but we have a very good correlation of major tops and lows in the markets here. Just connecting here the key points, so you see the cyclic behavior, which is obviously seen in the sentiment data. And now, what do we read out of this cycle here? It's just zooming into where we are in this cycle, And do you see it here? I mean, it's quite obvious. We are overdue that the financial stress should increase from these levels here. So what the cycle suggests here, that by beginning of this year, exactly as this is where we saw the top in the markets here, exactly at this point, and from here onwards, we should see now financial stress increase for the next year. Which means, if financial stress increases in the markets, we would expect markets to continue to go down. Remember, this cycle needs to be read vice versa on the stock markets here. So by reading this cycle, there's no indication that there seems to be any bottom in the markets. This is just a confirmation that the long-term trend or the trend reversal to see a market top by end of last year, beginning of this year, was just the start. It's not over yet. So counting the rally from June to August, not the start of another bullish period, was just a correction or a bear market rally, what we call it here. Just confirmation from the financial stress index. I mean, we are not here to discuss economic conditions, but if you are aware of the current economic condition of most companies out there, the revenue and profit streams moving forward 1, 2, 3 years does not really look good, which would conclude by getting more financial stress in the markets here, but it's not taken into account on the stock market yet. So the stock market seems to think about a different scenario, at least if we go from June to August. But enough interpretation here. The cycles speak a clear message. Let's switch to another interesting sentiment data set. It's the volatility index, the so-called VIX Index also on the market. It's measuring the volatility, and it's similar to the financial stress. So if we have very low volatility in the markets, these corresponds in most cases to market tops. And if we see very high VIX readings, this corresponds in most cases to market bottoms. So for our cycle analysis, this is a perfect data set to throw on our cycle analyzer. So therefore, that's the next data set I want to review in regards to getting a clue on the current cyclic situation. We switch to the VIX Index, which is also provided by Yahoo Finance. So this is a common public data set you can review. Let's see here the long-term absolute values here. The reading is the same as we do with the financial stress index. However, this is now daily data. So we have switched to a shorter term period with this data set, daily data. So we can now detect daily cycles coming from the long-term analysis, now moving down on the next lower time frame, daily time frame. And you see the volatility index has some spikes here. So the key high in the year of 2000, this was the major low, and the other peaks here in the data set. You can review the past behavior. Peaks in this data set correspond to market bottoms. Lows or low points in this raw data set correspond to market tops. Here we are coming from very low levels by the end of last year, very low readings. It's kind of now fluctuating around, but let's throw the cycle analysis on this data set here. Again, we have the spectrum at the bottom of the chart. Spectrum here, not as clear as on the weekly data, so that's interesting to learn something which cycles to pick here in this particular case. However, there are 1-2 cycles which could be used, which stand out. Not the clear separation we want to see, but let's start with these two cycles, one with a length of 173 days and the other one with 240 days here. So let's start with this one first. Again, just a quick view on past behavior for this cycle here to see just a visual confirmation about picking the tops at the points where the cycle turns and the lows in the raw data set when also the cycle turns here. So I think it's quite obvious at this point here, quite obvious at the low point here. So then we have two highs here, which and this peak here quite obvious. The next low here, I think we have the high, then here another low. Here it's clear we have a high here, and now you know where we are today. I think it's clear reading where we are. You can review the situations of tops and lows and check out what happened in the stock market at this point in time. Just a short general rule how to read it. Tops in this cycle here will show you market bottoms, while bottoms in this cycle here will correlate to market tops. So where are we now? This is not the situation where you would expect the stock markets to form a bottom and a continuation of the rally. This is the situation from a cycle point analysis, which confirms a market top here in that case. So, and the short-term reading you see also nicely here. So the this low here by December 2022 was the major high. Then we saw a down move into June, and this point here, I think this was, it was May, April, April, May, June, somewhere May, June here. This is where the low in the markets started to form out, and then formed a rally exactly into the period of mid-August here where we are. So the cycle which you see here Yeah, this is the top end of last year. This is the bottom, which has, or the interim bottom, which we have seen in May, June, and this has been the rally into August. But now the sentiment cycle on the volatility index indicates that volatility will rise from the level we are now. So again, another confirmation that markets seem to be positioned for the next move down, not a continuation of the bullish period here. So we have our long-term weekly cycle. We have the long-term financial stress, which speaks a clear picture. We have the short-term daily volatility cycles, which also is alignment with the market top. Put this into the context of the inverted yield curve and the cycles I showed you last week, and I fear the message becomes clearer and clearer, at least the cycles become clearer and clearer, what is the current situation in the global stock markets based on cycles. So last but not least, let's now throw some more details into this session. So in that case, even though I don't recommend to do cycle analysis on individual stocks, because the noise to signal ratio is not good for cycle analysis. Otherwise, you know what you're doing. However, let's have a look at Apple. And the reason I'm choosing Apple is we have seen very strong moves, and it's, I think, most of the largest stocks in the Nasdaq, in the tech index. So I think it counts for a large amount of general moves in the indices anyhow. And yeah, let's clear it up first. This is no, not this, I need to share it here. This is Apple. Yeah, just what happens. So you see here the rally from June to August was very enormous. So and doing a cycle analysis here, also on the daily cycle analysis, to check out what the reading of the cycles is here. And it's a little bit different than the VIX Index, because here you have 3 clear cycles, yeah, which we should use for further research. You could argue there's also a 4th one here, but there's a clear reason why I often repeat here on the channel why I would not pick this peak here in the spectrum with a length of, let's see, 293 days. The reason not picking this cycle from the spectrum is it has a very flat plateau. And let me explain you that. So here we have a very flat plateau, and we cannot be very sure where the peak has formed in regards to the length. You see, this is what I'm meaning when I'm talking about a flat plateau. So we are not quite sure. Mathematically, we can position the triangle where it is. So from a mathematical point of view, there is a clear peak at that point. However, as it is a flat plateau peaking cycle in the spectrum, we cannot be sure about the length in detail. So therefore, I would skip this cycle or not use this longer term cycle here. However, it's a different story with these 3 cycles. This is a clear peak in the spectrum. So let's pick these 3 cycles here, just in short to see what they tell us about the reading of Apple, or at least it's similar to doing a daily cycle analysis on the indices. So that's the reading. I will leave the long-term alignment of tops and bottoms now for your visual confirmation. If you press pause on the video later on, I think it's quite easy to spot them here. So we have a very great correlation, or do it on your own if you jump to the cycle analyzer. But I think also here the reading where we are today speaks a clear message, yeah, if you see this cycle here. So this is also the reading of expecting a top in the stock markets and not confirmation about the continuation of the rally. So this is another cycle measurement of another data set, now a tech stock used in that case. Same reading of this cycle. And last but not least, and this is what you anyhow need to do finally, never just purely use cycles. Cycles give us a guideline where we are. They set the context of what to expect, what to happen. They give us a timing information about what, from a timing perspective, we could expect. Now you need to add technical analysis. Technical analysis is out of the scope of this channel here. It's a knowledge area which is not the key focus of the foundation. But I always recommend use cyclic information now to fine-tune your technical analysis on your technical charts. And just a quick reading on that, just using because there are some interesting technical situations right now. This is the S&P 500 daily data. I have marked different situations here, but the key point for today is this is a more or less a fine-tuned RSI indicator. You will find it on TradingView. I often repeat to this indicator, but you could use any oscillator, any technical indicator, and fine-tune this to the current length of the dominant cycle. If you remember the cycle I showed you on the volatility index and also on Apple, and you can also repeat this on the S&P itself, you will see that there's always the dominant cycle with a length of 170 something days. Use half of the cycle, which I've used here, to put this as input for the length setting of any technical indicator, which is around 85 as the input setting. So this technical indicator is set to a length of 85. And if you now see where you have the interesting turning points of this indicator, you see also this reading here. First of all, this channel is very fascinating here. So it starts at the end of last year with this major lows in the markets. By the way, we have hit the low point exactly here in June, and the upper range of this channel, just set by the tops now formed in this downtrend cycle here, has exactly been hit in beginning of August. So just from this trend analysis, but however, the technical indicator here, fine-tuned by the cycle length of 170, indicated this clear situation. This is the technical reading of at least interim top, not a bottom. Again, technical reading here. So that's the key message I wanted to bring out today by reviewing long-term financial stress index, volatility index, one stock cycle, and technical analysis. All charts and cycle analysis I just showed you during the last 20 minutes speak the same language. They tell you the same story. I leave it now up to you to write the conclusion of this story. I think it's obvious, so I don't need to name it. You name it. Otherwise, please just press rewind and just start over again. So that's it for today. I hope it gives you an indication where we are in regards to the cyclic situation in the global markets. Please put this in context with the longer term scenarios I outlined also last week. Now it's time to get to your questions. As we are live, as always, I recommend please join. I see we have lots of questions in the chat. So give me some seconds to review the chat, and please feel free to even rush in more questions. I will check. Okay, just for fun. Yeah, I'm located in Hamburg, and Horst Rubisch is a famous soccer player here we know from the region. So Epes, we need to talk face to face. Crypto next week. So today I promised last week to have a review of the global stock markets, which we did today, but agreed. Let's review current cycles in Ethereum, Bitcoin next week, Monday. So not today. Let me quick. Edward. I think. Yes, Edward, thanks for bringing this up. I think I showed it in the last video. So it's not the 45-degree line, but if you connect the peaks in the spectrum from if you use the dominant peak in the spectrum and then try to draw a line which then is ticking the peaks from a line, you have an harmonic ratio between cycle length and amplitude, which is a kind of recommendation which cycles to pick for a composite cycle. And so therefore, just confirming, it's not always the 45 degrees. It's more starting from the highest peak, so the dominant cycle, and then trying to put a tangent or a line on the other peaks in the spectrum. Okay, I think you're helping out yourselves in the discussion, which is where I like. I think the replay should be available in YouTube, or at least when the session is finished, you should be able to review. Be available. Okay, yeah, the data topic. Sometimes you can load further data when you click the plus here. Yeah, we need to work on optimizing data access, but which is not the primary use case for the foundation. So we want to make it easy for you to use the existing data set, but please bear with us. Our main focus is on the cycle analysis technique and not data feed integration. So yeah, there are some hiccups in accessing different data feed. Just maybe to add to the question, I was wondering if there was an Excel sheet we used to upload stock data into your database. You can upload any data set as CSV or comma separated values into the cycle scanner. So if you have individual data sets like individual stocks, feel free to use this CSV file, go to upload data in the cycle scanner, and you can do the same procedure on whatever individual data set you like. Or if you want to repeat the procedure I've just showed here, you can use the ID from Yahoo Finance also to access stock data in the cycle scanner. Okay, I think if there are no other content-based questions on cycle analysis, I anyhow see that you have some internal discussions, which is good and nice to see. That's why I like this community. I would close the session for today. We try to keep it 20-30 minutes. I think there's a clear message for today's cycles in global stock markets. Please join next week. We will have a look at crypto next week. Like the channel, recommend the channel. Drop me a note below the video. You are invited to become a regular follower here of Cycles TV. And I would leave the conclusion, Elliot, with your question. I think if we review the full show, I think my message here today was clear from the cyclic perspective. And let's monitor the markets. Let's monitor cycles. Let's learn something on cycles. That's why we are here. Have a nice week. See you next week, Monday. Same time, same place. Stay safe. Thanks for joining.